Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. People listen to our show from all over the world, and they invest in all kinds of different things. But what kind of real estate do you think most investors start with? It's the single-family home. Well, today we'll look at some of the reasons why new and seasoned investors stick with single families, and we've got a great guest on the Real Estate Guys radio program. The Real Estate Guys are throwing a party, and you're invited. Join us at the New Orleans Investment Conference, November 1st through 4th. Now in its 49th year, it's the world's longest-running investment conference and features some of the biggest names in economics and investing, including James Rickards, George Gammon, Danielle DiMartino Booth, Rick Rule, and Peter Schiff. The Real Estate Guys are speaking in multiple sessions, attending lots of others, and we're hosting an invitation-only party one of the evenings for our friends and listeners, including some VIPs for you to mingle with. So make your plans to join the Real Estate Guys at the New Orleans Investment Conference. With all that's going on in the world, no serious investor can afford to miss it. Send an email to neworleans@realestateguysradio.com and we'll get you all the details. That's neworleans@realestateguysradio.com. And we'll see you there. Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms, and joining me as usual, our co-host and financial strategist, Russell Gray.
Hey, Robert.
It is always a great time to invest in real estate, but as we talked about last week, sometimes wait and see can be a choice, and we like to prefer the think and do mantra, which is even though it may not be time to pull a trigger on the property, what you don't want to do is check out mentally of the game. So I think there's a lot we can be doing, a lot we can be learning if we're unsure of the markets. And today, we're going to talk specifically about possibly the most powerful real estate investment there is, and that's single-family housing.
Well, you know, if you think about it, you can ask anybody at almost any point in time. In 1980, don't you wish you would have bought properties in 1960? In 2000, don't you wish you would have bought properties in 1980? In 2020, don't you wish you would have bought properties in 2000. So 20 years from now, it's going to be 20 years from now. And I think sometimes when we read the news and we listen to the headlines and we listen to people who make their living looking at the macro, and you guys all know I'm a fan of the macro, it puts everything in a blender and you're dealing with averages and medians and national averages. And of course, we all know real estate is hyper-local. And so in any market where the macro may not be all that rosy, it doesn't mean that there aren't pockets of opportunity because each property is unique, right down to the ownership, the financing structure, the motivation of the seller, the condition of the property, the potential of the property, who it serves, the demographic. Taking a single family home, for example, and turning it into a shared housing or residential assisted living or recovery housing is different than turning it into, say, an Airbnb or turning it into a long-term rental. So even the same property, depending on how you use it, has different potential. And of course, then there's the management, the skill of the owner. So to say that it's a good time or a bad time to invest is kind of a blanket statement. And I think if you're going to be a serious investor, you got to look below that and really say, what is it really that I'm looking to do in this particular market, and what's the long-term trend going to be?
If you've ever played Monopoly, you know how it works. You start with your little green houses, and at some point, you trade those in for a big red hotel, and the rent goes way up. Well, most real estate investors start with what they know. They may have grown up in a single-family house. They may live in a single-family house, and there's a lot of reasons to like that asset class. Many investors, once they get maybe Fannie and Freddie'd out, they can't easily get more loans for single family, or they just get impatient, decide to graduate up to something else. Might be multifamily, might be commercial, might be syndication. But the bread and butter of real estate investing has always been the single family home. And a lot of great reasons for that. It's the easiest thing to finance. It's got the flexibility you talked about, Russ, which is it doesn't have just a single outcome. Unless you buy, build for rent in an area where 100% of the folks that live there are tenants, a single-family house could be a rental, but it could be owner-occupied, and then there are the other uses you talked about. So I think whether you're starting in real estate or you're looking to acquire more in your portfolio, there's some big advantages to getting involved in single-family.
Yeah, well, we talk about it all the time. It's arguably the most subsidized, most protected, most promoted sector of real estate. Voters live in houses. Businesses cater to the biggest demographic, which is people. And so, if you really think about it, there's just tremendous incentives by the powers that be, whether it's government or industry, regulators or private associations, to prop up and promote real estate. Now, that doesn't mean that real estate and single family housing in particular is immune to recessions or depressions or financial turmoil. We certainly saw what happened in 2008 when the bond markets broke and took the credit markets with them. And so what ended up happening is the air of easy financing getting pumped into the jump house of real estate values broke. And during that window of opportunity, which we felt was a temporary situation, there were a lot of bargains to be had, but you had to be willing to move in when everybody was moving out, and you had to be positioned to act when the normal methods of putting a financing package together weren't available to you. And so these are the things that we look for when we're in any cycle. We've got interest rates that have spiked up farther and faster in terms of percentage of change than really any time in our lifetimes. It's created all kinds of turmoil in the financial markets, bank failures, and there's a lot of things. The 10-year bond is really at the same place it was in 2007, just heading into the financial crisis. And so there's reasons to be alert. There's reasons to be cautious. But again, I'm just going to go back to the basic thing. If you play the long-term game, which is what real estate investing is, 20 years from now is going to be 20 years from now. And I'm guessing pretty much everybody listening to this is going to wish that they had bought more properties today that they're going to own 20 years from now.
Every property is not the same. Our guest today has a storied history of investing in single family and other assets over the years. He's learned a ton about market selection and dealing with tenants and property managers and all that. When we come back, you'll meet our multi-decade friend Jason Hartman today on the Real Estate Guys radio program.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
Hey, it's Robert Helms. Thanks so much for listening to the show today. I want to personally invite you to come see an amazing real estate market that combines excellent cash flow, offshore diversification, and what we affectionately call lifestyle investing. Come join me from December 8th to 11th in the beautiful country of Belize. The Real Estate Guys have been bringing investors to Belize for more than 18 years now, and our discovery trip is designed to show you the market like nobody else can. Sure, Belize is breathtakingly beautiful. The people are wonderful, and wait till you taste the food. But the real opportunity is the real estate investment potential. There's all types of opportunity in Belize when it comes to real estate investing, including both long-term and short-term rentals, commercial and retail triple net properties, business opportunities, land acquisition, development, agriculture, and more. And as the only country in Latin America with English as its official language, it's easy to understand the law. Property rights are strong, and contracts are in English. And in Ambergris Caye, a unique situation exists where demand for rentals continues to outstrip supply, creating a compelling environment for investors. So come see for yourself. Join me December 8th through 11th in Ambergris Caye, Belize, as we study the market, learn about the sustainable drivers, and tour lots of beautiful real estate. And like all of our field trips, there are no properties for sale during the weekend. Rather, you'll meet lots of local providers that will help educate you about the market so that you can follow up with them after the trip if the market is interesting to you. You've heard about Belize on the Real Estate Guys for all these years. Now come see what all the excitement is about. Plus, we'll have lots of time over meals and activities to talk about all things real estate. To get the details, go to the website at realestateguysradio.com and click on Events, where you'll find the Belize Discovery Trip. Once you register, you'll get information about our group hotel rates as well as travel details. So join me in Belize, December 8th through 11th. It's a beautiful country with lots of amazing possibilities, and the only thing missing is you. Go to realestateguysradio.com under Events, and I look forward to seeing you in beautiful Belize.
Hi, this is Garrett Sutton, Rich Dad's advisor. Remember, equity happens, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program, now in our 27th year of broadcast. We're glad you've tuned in today and you picked a good show because we have an amazing guest. We go way back with this gentleman. He's one of the good guys. Welcome, fellow podcaster Jason Hartman. Hey, Jason.
Hey, Robert and Russ. It's great to be here with you. And 27 years, that is phenomenal. I thought I'd been doing this a while. I'm only 18 years in. So
Well, you have been doing it a while. And let's face it, there's a lot of folks that listen to both our shows, so welcome to them. And for the folks that haven't listened to you yet, we're going to give them that opportunity. Your Creating Wealth podcast is awesome. But not only that, Jason hosts a variety of podcasts on all kinds of topics, very prolific. But when we get a chance to get together, one of the things that you always present about is the current stage of what's happening in single family. I know you've invested in apartments and other things over the years, but single family is kind of your sweet spot. Maybe take us back and start at the beginning. When did you get invested in real estate? When did that become a hot button for you? And then why single family houses?
Yeah, we've done both. Single family is kind of our main bread and butter. Multifamily, we do a little bit of that too. I've owned some big apartment complexes as well. And for my money, I like the bread and butter single family homes the best. It doesn't scale quite as easily if you're big and you've got tons of capital. But as far as appreciation metrics and the thing that everybody wants, the single family home, I think, is really the key thing. I love what Russell said. He said, businesses cater to the biggest demographic, and that's people. And most people want single family homes ultimately. They may not be able to afford it initially, for sure. People will usually start out in an apartment. But yeah, I've been in the traditional real estate business for a long time. I had my own company. I sold it to Coldwell Banker in 2005. I got into the part of the business that I really started in that I liked the most, and that's helping investors buy properties. That's how I started my traditional real estate career, selling HUD and VA government repos in Southern California where I lived. And what I tried to do is start investing nationwide many years ago, about 19 years ago. And it was really difficult. So I thought, a lot of other people will want to do this. Why isn't there a business out there that can help them do this nationwide? And so I created that business, and I basically was the first customer of my business. And I think that's where a lot of entrepreneurs start. They just notice a problem, kind of something in the market that's missing, and they just end up providing it. So not an uncommon story.
Yeah, and I think the point you make about single family is a strong one. If you think about it in terms of the extremes, imagine I 1031 my way up to a 600-unit apartment complex. Well, how many buyers are there for a 600-unit apartment complex? A few, right? Big syndicates and REITs and groups like that, perhaps. But a single-family house is universally exchangeable. Easy to sell a single family home if you need to. If I have a renter in it, I might sell it to another investor as a rental, or perhaps I sell it to the tenant themselves and they become the owner, or maybe I sell it to an owner occupant. So there's a lot of flexibility when it comes to single family. What are some of the other big reasons you see, Jason, for folks to consider and maybe even concentrate on single family homes?
Well, it is the most desirable. It appreciates the best. It also has the best financing far and away because, as you were saying in your intro portion, it's the most protected and really coveted asset class. Everybody in Congress probably lives pretty much in a single family home. Okay. This is like the sacred cow of our tax code. It's got the best financing. It's really subsidized by the government. And so, if you ever get upset and you feel that the welfare state is too big and that, they're giving away too much free stuff to other people, well, you can't beat them. So join them, right? Become a real estate investor because they're giving away stuff to you. And, after the Great Depression, decades and decades ago, they formed these government sponsored entities like Fannie Mae, Freddie Mac, and some others to basically subsidize housing. That makes the United States market unique in all the world because it has far and away the best financing. And one of the strategies I've been teaching for a long, long time is called inflation-induced debt destruction, where basically you borrow money at today's rates, but you pay it back at tomorrow's rates. And what do I mean by that? Well, everybody's sort of accepted that we're going to have inflation as the normal state of affairs because it's been going on for decades and decades. When you do that, you get the value of borrowing at today's dollars, but you get to pay back the debt in cheaper dollars over time because inflation basically debases the debt. With income property, we don't even pay our own debts. Our tenants pay our debts for us. So imagine that. If you have $1 million in mortgages, say you own 3 or 4 single-family homes, and that totals $1 million worth of mortgage debt, and you look at your statements today, and it says $1 million. That's how much you owe. And then you go 5 years, 10 years into the future, and that $1 million will be worth a lot less. So you progressively pay it back in depreciated dollars. It's a very good deal. And this is the exact same deal that our government engages in. Because when we owe money to, say, China, for example, where we owe about $1 trillion to China, and we inflate the value of our currency, which is how the debt is denominated, we basically pay it back in cheaper dollars. So the United States gets a very good deal on that too. So what I'm suggesting is that all people that want to be investors follow the same business plan as the United States government. And that's exactly what they're doing. Now, the obvious question here is, well, Jason, don't they know this? Don't the Chinese understand this? Of course they understand it. But what choice do they have? You know, the U.S. has the reserve currency of the world, and it's likely to continue, in my opinion, having that reserve currency for a very long time, maybe longer than any of us will live. And that's the game we're playing. Yes, there are BRICS nations nibbling around the edges of that, and we can get into that conversation if you want, but these are basically dying countries that, you know, do not have the status the United States has. So I believe this game will continue for a very long time and make this a very good deal for investors.
Well, it's a great point. You know, the financing part is of concern, and we'd be remiss if we didn't talk about what's happened to interest rates, because that has certainly eaten into affordability. Not only that, but availability of properties, because fewer people want to sell those homes that have those low interest rate mortgages. But there's always a market that works, and there's always people that are don't-wanters that want to sell. And as investors, we don't get emotional about a property necessarily. We maybe study a market and find a market that we like, but then we're going to look for a property that's going to work based on its income, expenses, and the interest rate. What are you seeing in terms of that? How much has the interest rate rise in the last year or so really impacted investors with single-family homes?
You know, that is the million-dollar question. And my company helps people buy properties nationwide. That's what we do. And, you know, we thought business would be much worse than it is. And amazingly, the resilience of the real estate market is truly astonishing. Business is actually quite good. People are buying properties, investment properties, at these much higher rates. The cost of money has basically tripled. Housing affordability is the worst it's been in 40 years. And amazingly, people think it's only going to get worse. You know, housing affordability has no signs of getting much better, and we see these interest rates making the cost much higher. But most people, when they think of the real estate market and they try to predict what will happen with prices, they make a giant mistake. They have a huge blind spot here. And here's the blind spot. They think it's about today's market, and they think it's about a person buying a property today. And they say, well, nobody can afford a home. You're right. Nobody can afford a home. I mean, obviously that's a figure of speech. Housing affordability is the lowest it's been in 4 decades. Yeah. So that just puts upward pressure on rents. And rents during the COVID era accelerated dramatically, and they went through the roof. Now they've been decelerating, but they're still net positive. Rents are still going up. They're just not going up as fast as they were going up. So that's one factor for investors to consider. But the real thing is not to consider affordability today. It's to consider affordability of the 140 million housing units that exist already. And the fact that most of those people either purchased or refinanced their home during the COVID era. And they have extremely comfortable mortgage payments. People basically that refinanced or purchased during the COVID era entered a time machine. They got into the Back to the Future DeLorean car, and they basically went back to 10 years ago. So in 2011, the median mortgage payment was about $1,000, and the median house price was $225,000. In 2021, that median house had appreciated dramatically to $397,000. But that mortgage payment was actually cheaper. It was $18 less expensive than it was 10 years earlier.
Wow.
And this is the reality. The vast majority of people have this very comfortable payment that they won't give up. They absolutely will not give it up. Think of it this way. If anybody listening has or has had a corporate job, what is the way they do it in corporate America to retain employees? It's called the golden handcuffs, okay? And what they do is they make the future so good that you won't want to quit your job because you'll lose that future opportunity. That's exactly what we have with tens of millions of homeowners now, and why inventory is so low and so constricted, because they simply don't want to sell their house. Most people wrongly think that, oh gosh, the Fed is raising interest rates again, so that's going to just decimate the market. No, it actually makes all the existing mortgages more valuable to the people that have them. Okay, this is counterintuitive for a lot of people. 25% of the country has a mortgage at or below 3%. 65% of the country has a mortgage at or below 4%. And about 90% of the country has a mortgage at or below 5%. Now, those are the mortgaged people. But guess what? 42% of the country has no mortgage at all.
Yeah.
Free and clear. The one ingredient you must have if you want to have a real estate crash is millions and millions of distressed sellers. We simply don't have that. There's just no distress in the market yet of any substantial amount. Underwater properties, during the Great Recession back in 2008, we had a whole bunch of properties underwater. In other words, they had negative equity. And that at the peak of this, 26% of the homes in America had equity below the mortgages on the properties.
Yeah.
That number now is only 2%. So we would have to see, to have the situation we had in 2008, we would have to see the negative equity go up by 13x, right? To have basically the same thing. So back to this payment discussion for a moment. The mortgage payment today, well, the people that got them during the COVID era that refinanced then or purchased, their mortgage payment is actually cheaper than it was 10 years earlier.
Yeah.
But wait, there's more. It gets better than this, okay? We've had 26.7% inflation since then, if you follow only the official numbers. Of course, we all know, and I've heard you guys talk about it many times, the real rate of inflation is much higher than that.
Yep.
But let's just go with the official understated rate of inflation. That means when you adjust these mortgage payments for inflation, look what happens. The person today that you think has a mortgage payment that's only $18 cheaper than the people that got their mortgages 10 years ago is actually dramatically cheaper.
Yeah.
Over $200 less expensive in real dollars. And the house that you think is so much more expensive when they bought it, adjusted for inflation, is only about $65,000 more than the 2011 house. So it really, these people are sitting pretty. They have very comfortable situations. If they had to move, their rent in anything approaching equivalent house would be dramatically higher than their current mortgage payment that has 28 years left.
Love that. Well, and, to speak to the folks that haven't bought, didn't buy, and now they're facing the much higher interest rates today, the tripling of their payments, well, they are likely to be renters, and that's good for landlords, right? Folks that have houses who are, taking advantage of the rates, the rental rates that have gone up, to your point, not quite as swiftly as they went up maybe a year ago, but still trending in that direction. The challenge, I think, is for folks to get in today. If you haven't yet invested in real estate, then you've got to really sharpen your pencil.
Housing affordability is a big problem for buyers and for renters. The advantage, though, that people have is that, most most people think the Fed will ultimately pivot. I mean, they pretty much have to, and rates will come down. Now, interest rates are extremely hard to predict, and I've been very good at my predictions over the years, but the one I have been very bad at is predicting interest rates. I'll be the first to admit that. But if I had to predict it, I think rates will ultimately settle somewhere in the fives for mortgage rates. So you're basically in a position where you marry the property, but you date the rate. I know we've all heard that saying. It's getting a little bit overused lately, but that is the position. And as a real estate investor, you basically have the opportunity to renegotiate the deal indefinitely.
Yeah.
You don't have that in other assets. If you buy gold or Bitcoin or, any precious metal or stocks or bonds, the deal you got today is the deal. It doesn't change, right? That's the deal. So if you overpaid, sorry, tough luck. In real estate, though, because it's a multi-dimensional asset class, you can renegotiate that deal essentially in the future, right? The deal you have today is not the deal you're stuck with.
Right. We negotiate the price of the property once, but we can negotiate the financing as many times as we want, given what the market, hands us. They have to be a little careful, right? Because of amortization. So I remember when folks were, refinancing every other month when rates were on their way down, they were also kicking out their amortization schedule. And you make your early payments to the lender, and they're almost all interest and just a little bit of principal reduction. But by the end, you're paying down a lot more principal. So you give that up when you refinance, but it still has that flexibility. If you believe that rates are going to head down at some point, then you don't have to sell the property to take advantage of that, especially with single family. Not true for commercial properties, right? Those loans are often not easy to manipulate the rates on, but it's another big advantage of single family property.
Yeah, because the commercial properties have prepayment penalties and the mortgages aren't as long and they're higher rates. Yeah, good point.
So, Jason, before we take our break, I want to get your input on something else that's kind of in the vein of this conversation. And that is when you've got somebody who is looking at buying a property and they're trying to figure out that affordability part. And you hear a lot of the folks, especially in macroeconomics, who are saying, and I totally get this, hey, if Treasuries are paying 5.5%, why take all the headache and risk of buying real estate? So I know you've had folks on your show that have that opinion. We've had folks on our show that have our opinion. I'm not saying that's a bad way to go, but they're leaving something out. When you invest in a treasury, there's no upside at all. And you can say that, that it's risk-free or as close to risk-free as you can get, and that may be true. But when you buy real estate, there's other attributes. You've already talked about the potential appreciation of the property, but also the rent can change, the tax benefits, and so forth. So what would you say to somebody who says, well, rather than invest now, I think I'll just put my money in treasuries?
Yeah, well, that's absolute. They just simply don't understand math. I mean, okay, real estate investing is like an iceberg. A little bit of the iceberg shows up above the water. And for most people, they think, okay, well, it's going to appreciate or I'm going to get some positive cash flow. That's the above the water part of the iceberg. But what they don't see is all the stuff that's below the water that's the larger portion, which is leverage, tax benefits, principal pay down, and most importantly, my inflation-induced debt destruction strategy.
Yeah.
The amateur thinking is that, the sort of the first level thinking is, look, I'm going to make money on the real estate because I'm going to get some positive cash flow. And when I sell it in 5 years, it's going to be worth more than it is today. Right. And I'll make appreciation money. But what they never calculate is how the debt keeps getting cheaper to pay. That's inflation-induced debt destruction. And guess what? That return becomes an infinite return almost if you don't pay the debt. The tenant pays the debt. Basically, what real estate investors do is what all of the corporate kingpins do and the investment bankers and the private equity people do on Wall Street. They engage in LBOs, leveraged buyouts, where the property has self-liquidating debt. because the tenant pays the debt. And hopefully they pay you a little extra every month, and you call that positive cash flow. But even if they don't, the debt is self-liquidating because the tenant pays it. So on a leveraged buyout, and the reason these people get so rich on Wall Street is they buy a company and they use the company's income to pay the debt. They saddle it up with as much debt as possible. That's why it's called a leveraged buyout. And they acquire the company, then they make the company pay the debt back. That's exactly what we do with income property. We buy the property, we get all this fantastic 30-year cheap fixed rate debt, and yes, it is actually cheap still. Okay, I want to point that out, but that's a longer discussion. And then we tell the tenant or the property to pay the debt back for us. So it's an incredible deal. It's just a very unique asset class, unlike any other. And the other thing is with the Treasury comparison, if you were to go to jasonhartman.com and look at the pro formas of properties on there, okay, they would show that even in this market with very conservative projections, many of these properties return over 20% annually because of that multidimensional return, and a lot of it being underneath the water, or the surface of the water, like the iceberg. So they've just got to learn how to do the math. The treasuries, those are short-term treasuries. We have an inverted yield curve. You cannot get 5.5% on a 30-year treasury. Okay.
Right.
You're going to have to do something else after that bill ends, and hopefully you're going to be able to achieve that return. It's all about TINA, T-I-N-A, which means there is no alternative. The question is, not is real estate perfect? It's certainly not. Okay. Nothing is perfect. But compared to what? What else is anybody going to do that's going to beat it? That's the question.
Our guest today is seasoned real estate investor and educator Jason Hartman. We'll have more with Jason when we come back, and we'll play real estate trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
If you've been listening to the Real Estate Guys for a while, then you've heard about the legendary Investor Summit. Simply put, it's the highest level event we do, and the content, faculty, and attendees are amazing. If you're serious about taking your real estate investing to the next level, consider joining us. You'll spend more than a week with like-minded investors, world-class educators, and real-world professionals, and you'll have a blast. It all takes place next summer, so to get the details before they're released to the general public, send an email to summit@realestateguysradio.com with the subject Summit 2024. We'll add you to the advance notice list, and you'll be invited to spend a fun-filled week learning and networking with more than 25 class sessions and breakouts, plus small format roundtable discussions, great dinner conversations, and a ton of fun. Send an email to summit@realestateguysradio.com with the subject Summit 2024 and be among the first to get the details to join the Real Estate Guys and an all-star faculty on the 22nd Annual Investors Summit.
Having trouble finding deals where the numbers make sense? Invest in an asset class that delivers cash flow to you in good times and bad, and where most of that cash flow is tax-free. I'm Dave Zook. Many of you have heard me speak at Real Estate Guys events or heard me on their podcast. My team is a top 5 ATM operator in the country, and right now accredited investors can make cash flow returns well into the double digits and get huge tax deductions. For your free report on this lucrative asset class, email atm@realestateguysradio.com.
Forbes rated Memphis the best cash flow market in the nation, and our good friend Terry Kerr at Mid-South Homebuyers has been the premier turnkey rental property provider in Memphis for over 13 years. With an A+ rating from the Better Business Bureau, Terry has renovated over 750 houses. Real Estate Guys listeners have snapped up hundreds. Discover what these satisfied investors already know. Mid-South's properties are completely renovated with a 1-year warranty and a lifelong rental guarantee. They're affordable, well-managed, and easy to own. Perfect for beginning investors and veterans alike. Get in on the action. Contact Terry and his team via email at midsouth@realestateguysradio.com.
Hi, this is Kendra Todd, winner of The Apprentice, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Hey, come join the Real Estate Guys at the 49th Annual New Orleans Investment Conference. Happens November 1st through 4th in New Orleans, Louisiana. Some amazing speakers, including Danielle DiMartino Booth, Jim Rickards, George Gammon, Peter Schiff, and the Real Estate Guys. To get all the details about the conference and be invited to our infamous Real Estate Guys listener party, just send an email to neworleans@realestateguysradio.com, neworleans@realestateguysradio.com. We're talking about the proven advantages of investing in single-family homes with our friend Jason Hartman. Before we get back to the interview with Jason, it's time to play real estate trivia. That's your chance to win a prize by knowing today's real estate trivia question. Just like an ordinary trivia question, except it has something to do with real estate. When you hear the question and think you know the answer, send your best guess to trivia@realestateguysradio.com. Give us your name, the answer to the question, and your physical mailing address. Because if you're the first to get the right answer, you're going to get an awesome book by CPA Tom Wheelwright called Tax-Free Wealth. Show you how you're probably paying too much in tax and what you can do about it. That could be yours if you know today's real estate trivia question. Last week, we had this as our trivia question. Which U.S. state has the most realtors? Well, probably not too hard to figure out. It's the state of California. It's a big place, and the joke used to be when a police officer pulled you over in California, they didn't ask for your driver's license. They asked for your real estate license because not everybody has a driver's license. But today, California has the largest number of registered realtors in the U.S., and keep in mind, a realtor is someone who belongs to the National Association of Realtors, not just someone licensed to sell real estate. On the other hand, Vermont has the fewest realtors of any U.S. state. Here's our real estate trivia question for this week. Which day of the week is the best day to list your home? You can pretty much list your home any day of the week, but research shows that one particular day is the best because on average, you'll net more money. Which day of the week is that? Obviously, there's only 7 choices, so you ought to be quick to get your answer to us. Trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Give us your name, the day of the week you think it is, and your physical mailing address. The first person that gets it right gets Tax-Free Wealth by best-selling author and Rich Dad advisor Tom Wheelwright. That's today's real estate trivia question. We're talking about the powerful asset class of the single-family residence. Lots of great ways to invest. Our guest on the program today, Jason Hartman, well-known name when it comes to real estate education. And Jason, you help people find investment property. I think that brings up a really important topic, which everything we've been talking about so far has been kind of agnostic as to marketplace. But I've watched you over the years be very strategic about where to invest for a variety of reasons. Let's talk about that. Let's talk about market selection when it comes to investing in single-family homes.
Yeah, that's a great question. And there's an old saying in real estate that all real estate is local. In a country as large and diverse as the United States, there is no such thing as a housing market.
Right.
It just simply doesn't exist. It's just too big a country. We have over 9,000 cities in the United States. We have over 3,100 counties in the United States and countless neighborhoods. All real estate is local. When you ask someone, how's the real estate market? Well, I don't know if they're talking about Miami or LA or San Francisco or Seattle or Memphis or Chattanooga or Indiana.
Right.
I mean, where's the real estate market in a country this large? It simply doesn't exist, right? It's all local. But you can divide it into 3 types of markets. And I've always done this. There are linear markets, hybrid markets, and cyclical markets. 3 major types. Just to give some examples of this. Cyclical markets are the markets most people are thinking about. They get most of the attention from the media, and they're the markets that are kind of the trophy markets, right? The places everybody thinks about. Where I grew up, Los Angeles, California, San Diego, San Francisco, Seattle, the expensive northeastern markets, Boston, Washington, D.C., New York, right? South Florida, where I live in Palm Beach, Florida, but Palm Beach, Miami, those are all the sort of the trophy markets, the cyclical markets. And why do I call them cyclical? Because if you're looking at a chart, a graph of appreciation and depreciation over time, cyclical markets look like a roller coaster, ups and downs, glorious highs, ugly lows. And that's exactly what's happening now. We're seeing the cyclical markets suffer and give back some of that appreciation. But the linear markets, by contrast, are pretty much the rest of the country.
Yeah.
Most of the land mass of the United States and the entire world are linear markets. And these linear markets, if you're looking at a chart of appreciation, they just sort of chug along. They have little minor ups and downs, but they're not very pronounced. And they have cheap land values and much better cash flow. So these are the markets we like to invest in because they're much more reliable. If you are, and I don't even want to call it investing, but I'm going to call it speculating or gambling on a cyclical market, you can hit a home run if you time it right and if you're lucky. Buy in Los Angeles when interest rates drop and prices go through the roof, you're going to do great, right?
Yeah.
But that's not going to last. So, the older I get, the more conservative I get. And the linear markets are just very nice, dependable markets with good cash flow. I don't want to be a speculator. I don't want to be a gambler. I just want to invest and hold and make a nice yield on my properties.
Love that. And if you look at those markets, the other thing you mentioned, affordability, those tend to be more affordable tenant markets, right? Where tenants can get a nice property. And what we do as landlords, as investors, is provide clean, safe, affordable housing to folks that either choose not to or aren't in a position to buy a home. And that is a noble thing indeed. Well, this has been a great discussion, and always love to pick your brain when it comes to the single-family market. We have kind of a cool little announcement to make. We've been friends for a lot of years. We've been podcasting to the world for many years. You've been on our show. We've been on your show. And now, after all these years, we have kind of a fun thing that we're going to be announcing today, and that is we've got an opportunity for folks to be part of this incredible tribe that you and Kenny McElroy and George Gammon put together called The Collective. Tell us about The Collective, Jason.
Well, we are changing the name of the collective to The Collective Inner Circle, which is the exciting part. So we are coming together and we're going to do some great stuff together. One of the best things I have ever done in my life is join mastermind groups. I've been in many of them over the years. And, in life, we kind of go through life sort of picking our friends by default, not really picking them by choice, right? And what you want to do, Jim Rohn has that famous great quote. He was one of my original mentors I discovered at age 17. It changed my life. And that great quote is, you'll be the average of the 5 people you spend most of your time with, right? So you want to choose the people with whom you associate and make sure they are pulling you up. You don't want to be the smartest guy in the room. You don't want to be the richest guy in the room. You want to be in a room where you can learn from others, where others will inspire you because they are doing bigger things than you are. And that's one of the big values of the mastermind group, besides a million other values like fun, learning, great experiences, once in a lifetime experiences many times, with the travel and the events that we do. So it's just really an awesome thing. And we are so excited about coming together with you guys and doing something even bigger than we have been doing for the past 3 years.
As are we. We've been privileged to be invited to many of the collective events. And of course, we've had our Inner Circle Mastermind, our highest level of student. We don't really talk about that on the radio very often. You have to come to our syndication event to even learn about it. But we've been kicking around this idea for several months now, and thrilled to be joining forces. So it's going to be super exciting. Not a lot of details to share at the moment, but if you are interested in being part of a mastermind with incredible people from all walks of life, different businesses, different backgrounds, different investor parameters, and hanging out with Jason Hartman, George Gammon, Ken McElroy, and the real estate guys, then you can find out more by sending an email to collective@realestateguysradio.com. collective@realestateguysradio.com, and you learn all about the program and where it's headed. Well, Jason, this has been great stuff. This is a crazy time, right? So much is going on in the world. Any closing words for folks that are maybe feeling a little uncertain, a little unsure just about, real estate investing and what the future may hold?
Sure, absolutely. One more thing I did want to say on the Collective Inner Circle, though. We have our next event coming up in the Bahamas, and it's in early November. So send that email. Robert, you gave out the address, collective@realestateguysradio.com, and join us there. I mean, these are just incredible events. You're going to meet some incredible people and learn some incredible things. So I wanted to say that. But in terms of real estate, look, too many people are myopically focused on, is the market going to appreciate or depreciate? When there's really much more to it than that. As a real investor, you invest for yield, not appreciation. The appreciation, the capital appreciation, is the frosting on the cake. The yield is the core of the investment. And that's what we're investing for. So say, for example, the real estate market softens, right? Now, it's surprised everybody because prices are actually up, even though we've tripled the cost of mortgage money, right? Prices have actually increased, and many people can't believe that. All the experts have revised their forecast, whether it be Fannie Mae, Freddie Mac, Goldman Sachs. I mean, I could give you a whole list. I presented it on my podcast and my YouTube channel already. So that's fine. But remember, people only have three choices. They can buy a home, they can rent a home, or they can be homeless. Right. And those are the choices they have. So if the sales market softens, then the rental market improves. When the sales market is booming, most people don't consider this. Most of the time, the rental market starts to soften because would-be home buyers are pulled out of the rental pool and they're buying homes. Now, if they can't buy a home where you've got the lowest housing affordability in 4 decades, then they're forced to stay in the rental pool, putting upward pressure on rents. And that's one of the things people have to consider. The other thing people are never considering is capitulation and just accepting reality. And the reality is housing is less affordable. Sorry, that's the way it is. So people just have to simply adjust their expectations. They can't buy the same great house they could have purchased 2 or 3 years ago during the COVID era when money was cheap and houses were a little bit cheaper too. It's just more expensive, and people just simply learn to accept less. That's the reality of life. That's how I'd look at it.
All right. Well, great stuff. Hey, we appreciate you checking in with us, and thanks for sharing with our audience.
My pleasure. Happy investing, everybody.
There's Jason Hartman. You can find him at Creating Wealth in all your favorite podcast locations or at jasonhartman.com. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
With everything going on in the world, don't let your lack of financial understanding derail your investments. Real estate investors need to see the bigger economic picture. The Federal Reserve, bonds and interest rates, precious metals, oil and gas, cryptocurrency, and the inner workings of monetary policy, just a start. If you're at all confused about how and why market metrics intersect and what it means to you as a real estate investor, take your understanding to a new level with the Future of Money and Wealth video collection. Discover the opportunity to hedge against inflation, deflation, and stagflation. Gain critical insights on real estate niches that perform well in challenging times, and learn specific strategies to fortify your balance sheet before it's too late. Simply send an email to future@realestateguysradio.com for all the details. The Future of Money and Wealth includes 20 videos of powerful presentations and panel discussions featuring Robert Kiyosaki, Peter Schiff, G. Edward Griffin, Dr. Doug Duncan, Simon Black, CPA Tom Wheelwright, Brian London, Dr. Chris Martinson, and many more. Email future@realestateguysradio.com today.
Are you achieving everything you want in life? What if there was a time-tested way for you to get everything you've ever dreamed of? The most successful people in life set goals and keep themselves accountable. But how? The good news is that it's not rocket science. You too can learn the skills and unleash the motivation that will create success in your life. Hi, this is Robert Helms, and I'd like to personally invite you to attend Create Your Future, the 2024 Goals Retreat, January 12th to 14th in Dallas, Texas. This unique weekend event has been called phenomenal, inspirational, and life-changing by the thousands of people that have attended. Hear from some of them and find out more at goalsretreat.com. Get your life back on track, physically, spiritually, and financially. Attend the 2024 Goals Retreat on the second weekend of the new year. Visit goalsretreat.com to learn more and get on the advanced notice list. This is no dress rehearsal. Live the life you were meant to. Visit goalsretreat.com or call 888-489-7723 extension 18. That's goalsretreat.com.
Hi, this is Steve Forbes. You're listening to The Real Estate Guys. Have fun. You'll learn something.
Welcome back to the Real Estate Guys radio program. Hey, make plans to join us for the 22nd Annual Investor Summit at Sea coming up next June. You get all the details by sending an email to summit@realestateguysradio.com. Well, my goodness, always great to get around Jason Hartman.
It's always great to get around people that really have studied their niche for a long period of time. There's a lot of people who are in the real estate game right now who didn't actually invest or live through 2008. They don't have that perspective. Jason's one of those guys that went through that. I think the other thing is you have to look at the data and you have to think logically. And he made a couple of really great points that I want to draw attention to. One is to have a crash, you need distressed owners.
Yeah.
And the fact that these people are sitting on these wonderful mortgages they were wise enough to lock in for 30-year fixed. Yeah, they're trapped a little bit, but it's not a bad trap. It's a lot better than, a lot of people that were trapped in underwater properties with mortgages they couldn't afford. Those were distressed sellers. They had to sell at a loss, and that put a lot of downward pressure. I think the other thing that's important to note, with this housing unaffordability, it creates another dynamic, and that is the new buyers who can't enter the market can't create the demand that the home builders need to add supply. And so it becomes this constrained inventory situation that doesn't have an easy answer until the rates change it around or the demographics shift around, and that just takes time. So I think that the situation we're in could be maybe a little bit static or stable for a while, and that can be good. Whatever it is, accepting the new reality, as Jason closed with, when you kind of know what the new rules of the game are, people are very resilient. They figure it out. They adjust. And I think the most important thing, at least that I thought was a great takeaway, is understanding what investing really is. For years, Kiyosaki has said cash flow, cash flow, cash flow. And everybody thinks buy low, sell high. It's what we're conditioned to think about from Wall Street. But the notion that what you're really doing as an investor, as a real estate investor, is accumulating a portfolio of self-liquidating debt. If you really focus on that, now you understand what you're supposed to do, right? If I buy a property and it's negative cash flow and I've accumulated debt, it's not self-liquidating. Can't check that box. I made that mistake in 2005, 2006, 2007. I was willing to go negative cash flow. I had a profitable mortgage business. I thought I could feed the negative. Then I ended up in a bad situation. But if you actually structure the deal at the inception so that the debt is self-liquidating, and then you just let inflation, that's what equity happens is all about. You just let inflation do what inflation is going to do. So I thought that it was great listening to Jason articulate the wisdom that he's accumulated over the decades, and that just comes not just from studying in theory, but also being in the real world and working with real world investors. So I'd probably go back and listen to this 2 or 3 times, especially if you're brand new, because there were just some truth nuggets, some real beauties there that you want to really think about and understand and internalize. And if you do, it focuses your actions, and your actions will produce better results.
Hey, big thanks to Jason Hartman for sharing his ideas and wisdom with us today. If you want to hang out with Jason and the Real Estate Guys and Kenny McElroy and George Gammon and a whole bunch of awesome folks in the Bahamas, and who wouldn't, all you have to do is send an email to collective@realestateguysradio.com, collective@realestateguysradio.com. You'll learn about our new super powerful combined mastermind. We're thrilled about it and can't wait to introduce it to you. We're going to have an awesome show next week, that's for sure. Until then, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers, low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct, asset protection strategies for real estate investors from attorney and Rich Dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.